where they need that money desperately because they're looking at their loan book and realizing that it's on fire right now and they need to do something. The Canadian Food Bank turns people away every single day due to demand. I mean, this is literally the sort of thing you would hear in a depression. The Bank of Canada has created an absolute disaster over the past decade in collaboration with the Conservative government and the Liberal government, which is also the NDP government. So you've seen all governments collaborating with the Bank of Canada, and basically they have created a huge housing bubble, and the risk in the banking system keeps growing and growing and growing as the risk of default is increasing, and we're actually seeing defaults of the riskier loans, which are really starting to rise at a rapid rate. So this is pretty alarming stuff because it's just going to filter through as you go down risk levels. You start off with those most high risky borrowers that are going to default first, followed by your medium risk, followed by your low risk borrowers. It's just the way it works, guys. So anyway, this is a key article that came out via the Canadian press on Yahoo Finance. So risks remain in the mortgage market as a wave of borrowers still have to renew at higher rates. Alternative lenders take a growing share of new mortgages and delinquency rates keep creeping up, Canada's housing agency said. There is higher strain in the alternative lending space, which caters in part to borrowers who might struggle to qualify at the big banks because of their credit score or less steady income, and who generally pay higher interest rates to compensate for the risk. Now, I couldn't find the article from Better Dwelling that we covered way back in 2022, but basically we were saying how these MICs and private lenders had absolutely boomed during the pandemic in the mania, because in that mania and melt up, people were just willing to do anything to get the house, and most people were speculators and investors, and they were looking at it, well, you know what, interest rates are really low right now, but generally those mortgages are really short term, and a lot of them can't even get the finance anymore. So this is actually causing huge distress in these markets. So 90-day delinquency rates at mortgage investment corporations surpassed pre-pandemic levels to reach 1.15% in the first quarter, up from 0.88% a year earlier. But this is where it gets really interesting, guys, so listen closely to this. For borrowers with single-family homes in the segment, the rate for those at the top 25 mortgage investment corporations more than 60 days behind in payment reached 5% in the second quarter, up from 1.7% in the fourth quarter of 2022. So we're talking about incredibly laggy data here, and you're talking about delinquencies that are literally over 5%, around 5%, but that's a big number when it comes to Canada. And you have to ask, is that trend going to slow down because the Bank of Canada is coming in and they're going to stick this soft landing and everything's going to be fine? Don't you worry. The mainstream media is just harping along saying that these interest rate cuts, they're going to be stimulative, guys. They're going to be really stimulative. You just believe it, and then hopefully maybe it will happen, when actually it has no effect. And the Bank of Canada has no control either. I've said this many, many times. Just look at bond yields. They don't do what the Bank of Canada wants them to do at the long end. They can only impact that short end of the curve there, and it's arguable whether they can even impact the long end when they're doing quantitative easing, because people think that has more of an effect than it actually does. And obviously Canada's GDP is also struggling, as we're going to get into now. So Canada's economy stalls in August. Central bank's Q3 growth forecast in doubt. So this is what's happening. So Canada's economy is likely to miss the Bank of Canada's revised third quarter forecast after a slew of temporary factors stall gross domestic product growth in August, data showed on Thursday, at a time when business output was already anemic. Yeah, they're right about that. And David Rosenberg, as he correctly pointed out when he wrote an article in the Globe and Mail, he said that if you take away the population growth, guys, we've been negative since 2022. We've been in a recession. We've been in that per capita recession since 2022 as well, because all the immigration is mostly low skilled. So it's detracting away from the standard of living for most average Canadians, meaning standard of living is actually decreasing decreasing regardless of what GDP is doing, headline GDP. But now even headline GDP is really, really looking bad. So they just can't hide this anymore. These fictional numbers even are starting to look bad. So you know things are going to get gnarly very, very shortly. So economic growth for July also was revised downward to 0.1% from 0.2%. Statistics Canada said and added that preliminary data showed that growth is likely to have rebounded to 0.3% in September. And they're probably thinking that why? Because of those rate cuts. They're thinking that, oh my God, this is so stimulative. We've had some rate cuts. Everybody's going to be out there buying new sofas, financing new kitchens, buying new condos, all that stuff. We know it's not happening. We're not stupid, but the government bureaucrats, they are pretty stupid. And you have to also look at the public sector growth. Total employees in the public sector. Look at it compared to the UK, compared to the United States. Public sector employees pretty much at a high not seen since the 1990s. We keep coming back to that, don't we? The 1990s. We're not seeing so many things that are happening since then. So the distress is obviously mounting, and you've got to listen to this video, guys, because I mean, the Canadian Food Bank turns people away every single day due to demand. I mean, this is literally the sort of thing you would hear in a depression. So I want to play you this clip real quick. So listen to this.
In January, for the first time in 40 years, we had to put in place a waiting list.
Because the number of people coming for help has skyrocketed, explains Tasha Lackman, who runs the place.
When I started here just under 3 years ago, we were doing 700 families a month, and now we're doing 1,750.
She says they're having to turn people away.
So there you go. Food banks in Canada are actually having to turn people away because the demand is so high, and she hasn't seen anything like this in 40 years. So where does that put us back to? If my math is correct, that's the 1980s when you had inflation that absolutely skyrocketed when interest rates were super, super high, and when you had multiple recessions. And actually, when you look back on it as well, that is the time frame where most Canadian banks that have ever gone bust actually went bust. So that goes to show what a warning sign this is for the financial system, because if people can't pay their rent, if people can't pay their mortgage, then it's just going to be so bad for the banking system. And we already know this, because when you look at reports like this, guess what? Delinquencies are rising. They're rising at a rapid pace, and the data is so far behind that by the time we get the recent data from today, in 3 to 6 months time, it's going to be way too late anyway. And the Bank of Canada, they're as clueless as a donkey in the middle of a desert. So it's just absolutely crazy what's happening. And also the banks, the major banks, TD and RBC, are pretty much screwed now because they can't grow in the United States anymore, because obviously TD has a growth cap. Essentially, they've just been fined, as you may have heard. And then the Royal Bank of Canada on the back of that came out and said, hey, you know, we're not going to be pursuing any more growth or acquisition in the United States as well. So these two major banks now have a major problem because they can't continue to grow. So how are they going to attract new investment into the bank? And it's saying basically in this article that they may have to lower fees and compete more for borrowers' money with other banks in Canada, which would actually be a good thing for the consumer at the end of the day. But the reality is that if they're not able to grow, that's going to mean big implications for their stock price, for the amount of money that they can raise in capital markets, all at a time where they need that money desperately because they're looking at their loan book and realizing that it's on fire right now and they need to do something. So it's just absolutely insane, guys, what is going on. The banking system far from safe in this country, and it risks on the back of people who can't afford food, who can't afford rent, and who can't afford their mortgage. Just realize that. That's what this whole entire banking system relies on. So anyway, guys, if you've enjoyed this video, I'd highly recommend that you check out this video here about boycotting Canada. And if you're looking for a VPN and also want to help support this channel, then go to expressvpn.com/marketmania, affiliate link in the description. That's the best VPN and the one I use. I will see you in the next one. Take it easy, guys. Bye-bye.